All right, let's dive into a really fascinating case for Bitcoin's next big move. It starts with something a little strange, an anomaly in the price charts, but it connects all the way up to what's happening in the global economy.
So after this huge run-up, Bitcoin seems to be at a crossroads. Everyone's asking the same thing. Has it run out of gas, or is this just the quiet before the next big surge? A deep dive into the data really points to two possible futures, and honestly, they could not be more different.
So on one hand, you have what we're calling the blue scenario. That's the idea that the rally is basically over. But on the other hand, there's the red scenario, which argues that this is just a launch pad for an even bigger move up. So, which one is it? Well, the answer might actually be hiding in the charts themselves.
Okay, let's get into the evidence, because this is where it gets interesting. The entire argument really hinges on this strange detail in the price charts, something that kind of breaks the usual pattern. But to see why it's so important, we first need to understand the tool that helped find it. And that tool is called Elliott Wave theory. The whole idea here is that financial markets aren't totally random. They move in these repetitive patterns, or waves, that are driven by mass psychology, the cycles of optimism and pessimism. Analysts use this to try and figure out where the market might be heading next, and this theory is really the foundation for this whole analysis.
And here it is. This is the anomaly. In a normal bull run, the third wave is supposed to be the longest and most powerful one. But just look at this chart. Wave 1 lasted about 260 days, while Wave 3 was way shorter, only about 170 days. For an analyst looking at this, that timing is a huge red flag. It suggests something else is going on under the surface.
So the crucial point here is that this timing just doesn't fit the pattern if the rally has already hit its peak. Instead, it strongly suggests that what looks like Wave 3 might only be one small part of a much larger, much more powerful wave that's still building. This one technical clue really tilts the odds toward that bullish red scenario. But it's just the first piece of the puzzle. Now, a weird chart pattern is one thing, but it becomes a truly powerful signal when it lines up perfectly with what's happening in the wider global economy. And right now, there are several major economic shifts that could be creating the perfect tailwind for something like Bitcoin. First, we've got to understand this term, quantitative tightening, or QT. For the last couple of years, the U.S. central bank has been using QT to basically pull money out of the system. Think of it like a brake on the economy and on asset prices. But here's the thing, that brake is about to be released.
So let's connect the dots here. The Fed is about to take its foot off that brake by ending QT. At the same time, you've got a cooling job market and inflation that seems to be getting under control. All of that gives them the green light to potentially even cut interest rates. When you combine all that with growing global uncertainty, it often pushes investors toward alternative assets like Bitcoin. The economic stage seems perfectly set.
But there's a third, really critical layer to this whole argument. One that suggests this cycle might be fundamentally different from all the ones that came before. See, it's not just about charts and central banks anymore. It's about the technology itself finally hitting a kind of tipping point.
Previous crypto rallies were mostly fueled by speculation, just a whole lot of money rushing in and then rushing back out. This time, though, the argument is that the foundation is completely different. We're seeing a huge shift away from pure hype and toward actual, real-world use cases.
And let's look at the specifics here. The approval of Bitcoin ETFs has basically opened the floodgates to mainstream finance. On the tech side, major network upgrades are finally solving those long-standing issues with fees and speed. This is making real-world applications, from gaming to finance, actually practical for the first time. In short, the fundamental foundation is stronger than it has ever been.
So, what have we got? We have a technical signal from the charts, we have a favorable economic backdrop, and we have a fundamental shift in the technology. Now let's put these three layers together and see exactly where the evidence is pointing.
And this is really the key to the whole thesis. It's not just one thing pointing in a bullish direction. It's the rare moment when you see the technical signals, the macroeconomic tailwinds, and the fundamental tech all maturing at the exact same time. This kind of alignment is what makes the case so compelling.
So when you feed all this data, the Elliott Wave anomaly, the end of QT, the new tech updates, when you feed it all into an analytical model, what does it say? Which path is more likely?
The analysis assigns a 70% probability to the bullish red scenario. That means there's just a 30% chance that the rally is already over. Now, of course, nothing is ever guaranteed in markets, but the weight of the evidence is pointing pretty clearly in one direction. Look, a 70% probability is a bold claim, but a theory is only useful if it can actually be tested in the real world.
So what are the actual numbers we need to be watching that will either confirm this whole case or prove it wrong?
Because ultimately, all the analysis in the world doesn't matter if the price doesn't follow through. The market itself is going to give us the final verdict, and it all comes down to two numbers.
Here they are. These are the two critical numbers. If the price falls and just kind of stays below $74,000, this whole bullish thesis is pretty much off the table. But if it can break decisively above $106,000, well, that's the confirmation. That's the signal that the next big wave up is likely underway. Those are your lines in the sand.
So, there you have it. You've got a technical anomaly, a supportive economic climate, and a maturing technology all pointing toward one potential future with clear price levels to watch. The only question now is whether the market is about to prove this whole thesis right.